Trump says he wants to reduce the U.S. current account deficit to zero, but then other countries won't have the dollars they need to keep using the dollar in international trade. But Trump says if they stop using the dollar in international trade, he's going to put tariffs on them. But then Trump also says if the other countries don't reduce their trade surplus with the U.S. to zero, he's also going to put tariffs on them. So what does he want? It makes no sense. U.S. President Donald Trump has massively expanded the trade war that he was previously waging largely against China, and he has imposed very high tariffs on many countries all around the world. Trump announced the sweeping new tariffs in a ceremony outside the White House on the 2nd of April, and Trump claimed that this was Liberation Day.
My fellow Americans, this is Liberation Day, waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
Now, Trump loves tariffs. This isn't new. During his first term, Trump also imposed tariffs on China. He started a trade war against China in 2018. And during his presidential campaign in 2024, Trump repeatedly said that he loves tariffs so much that he thinks that the word tariff is the most beautiful word in the English language, more beautiful than love.
The word tariff is the most beautiful word in the dictionary, more beautiful than love, more beautiful than respect. No, less beautiful than religion, though, right? I don't want to get into that argument. But the word tariff is the most beautiful word in the dictionary. Remember that. It's going to make our country rich.
However, the tariffs that Trump is now imposing in his second term as U.S. president are much bigger than those he imposed in his first term and are going to have a huge impact not only on the U.S. economy, but on the global economy. Now, Trump claimed that these tariffs that he's imposing are so-called reciprocal tariffs, and the White House published a long list of countries showing what the new so-called reciprocal rate will be. At the ceremony, Trump even pulled out this comically large chart, and he named off countries like, for instance, China, which is going to face an additional 34% tariff plus the previous 20% tariff that Trump imposed, which means that the U.S. is now going to put a 54% tariff on all Chinese goods imported into the U.S. And the U.S. imports more goods from China than any other country. Trump also announced massive tariffs on other major trading partners of the U.S., like a 46% tariff on Vietnam, and the U.S. imports a lot of electronics, including cell phones and computers, from Vietnam, which means that the cost of those goods is going to massively increase. He likewise announced a 20% tariff on the European Union, a 24% tariff on Japan, a 25% tariff on South Korea, and high rates on many other major trading partners of the United States. Now, this is a crazy policy in numerous ways that I'll be discussing today. First of all, this is going to lead to high levels of inflation in the U.S. This is going to cause the price of goods to increase, which is deeply ironic because the reason that Donald Trump even won the 2024 presidential election in the first place is because there were high rates of inflation following the COVID pandemic. Incumbent parties and governments around the world lost power in elections. The Democrats were an example. Voters blamed Biden and Harris for the inflation, and Trump said he was going to bring down prices. But that's actually not even the craziest part of these tariffs that Trump is imposing. What's even crazier is that Trump has claimed that these are reciprocal tariffs, but the numbers that the White House is using are not the actual tariff rates charged by other countries. In other terms, it's a lie when Trump claims that these are reciprocal tariffs. This was pointed out on Twitter by the financial journalist James Surowiecki. He noted that in order to come to these numbers of the so-called reciprocal tariff rate, what the Trump White House actually did is they took the trade deficit that the US has with each country and they divided it by the country's exports to the US. And then Trump said, well, I'm going to be kind, and instead of charging the exact rate, we'll charge half of that rate. So they multiplied that by 0.5. And what's so funny about this is that when this financial journalist pointed this out, the White House Deputy Press Secretary, Kush Desai, who works for Donald Trump, he tweeted, "No, we literally calculated tariff and non-tariff barriers." And he linked to the official statement on the website of the Office of the U.S. Trade Representative, in which they explained how they calculated the so-called reciprocal tariffs. This paper said it would be very difficult to calculate the actual rate of tariffs and trade barriers that other countries have. So instead, as a proxy, they used the U.S. trade deficit with each country and determined what tariff level would be required to reduce the U.S. trade deficit with that country to zero. And in the formula that they wrote, they used Greek letters, which makes it look complicated, but it's actually not complicated at all. It's exports minus imports divided by, and then they use these Greek letters like epsilon, but it's by 0.5 times imports. So in other words, this journalist was right. The White House Deputy Press Secretary was wrong. This is not the actual tariff rate that countries are charging on the US. This is a formula that the White House created based on the trade deficit that the US has with each country. If you map out the tariff rate according to this formula, you can see that the tariff rate imposed on every single country maps 100% to trend. This is not based on the tariffs those countries are actually charging. This is totally arbitrary based on the US trade deficit with that country. So in other words, what this journalist pointed out on Twitter was correct. The Deputy White House Press Secretary was wrong. The Trump White House doesn't even understand the formula that they published to determine their so-called reciprocal tariff rate, because it's not a reciprocal tariff rate. And using tariffs like this makes no sense, because Trump says, okay, we're going to put these tariffs on to bring our trade deficit with each country to zero. But if the US wants to reduce its trade deficit with other countries, by definition, it has to export more to other countries. But other countries are also going to be imposing tariffs on the US, which means that other countries are not going to import goods from the US because those US goods will be even more expensive. The European Union has said very clearly that it's going to respond to Trump's tariffs with actual reciprocal tariffs. China has also said that it's going to respond to Trump's tariffs, which are now at 54%, because it's 34% plus the original 20%. China has said that it's going to respond also with actual reciprocal tariffs. And what's even funnier is that in this paper that the Office of the U.S. Trade Representative published to justify the so-called reciprocal tariffs that are not reciprocal, they cited an academic paper that talked about why international trade was good for U.S. consumers because it brought down the price of consumer goods substantially. That's the paper they quoted in their article arguing why the U.S. should impose tariffs on all these countries. I mean, it truly is amazing. The Trump administration doesn't understand what the impact will be of these tariffs, not only on the United States, but on countries all around the world. This is very likely going to lead to a recession, or at the very least, a significant economic slowdown and a lot of problems, including increasing inflation. And I want to add another very important point here, which is the role of the US dollar as the global reserve currency. Because if Donald Trump's goal with these tariffs is to reduce the trade deficit that the US has with the rest of the world, the US current account deficit, well, one of the best ways to do that would be to end the role of the US dollar as the global reserve currency. But Trump is doing the exact opposite of that. He is desperate to try to save the dominance of the US dollar, and he has threatened 100% tariffs on BRICS members and other countries around the world that try to de-dollarize and try to drop the use of the dollar in their international trade.
and we will keep the U.S. dollar as the world's reserve currency, and it is currently under major siege. Many countries are leaving the dollar. They're not going to leave the dollar with me. I'll say, you leave the dollar. You're not doing business with the United States because we're going to put 100% tariff on your goods. BRICS was put there for a bad purpose. And most of those people they don't even want to talk about it now. They're afraid to talk about it because I told them if they want to play games with the dollar, then they're going to be hit with a 100% tariff the day they mention that they want to do it. And they will come back and say, we beg you not to do this. BRICS is dead since I mentioned that. BRICS died the minute I mentioned that.
Now, if Trump truly wants to reduce the U.S. trade deficit, this makes no sense whatsoever, because one of the main reasons for this massive U.S. trade deficit is because of the role that the U.S. plays in the global economy as essentially the banker of the world, as the printer of the global reserve currency. Because the inverse, by definition, by accounting, the inverse of the U.S. current account deficit, the trade deficit that the U.S. has with the rest of the world, is the U.S. capital account surplus. So what does that mean? It means that because the dollar is the global reserve currency, other countries around the world need to get access to dollars. How do they get those dollars? The U.S. has to run a trade deficit with other countries. Otherwise, they don't have the dollars they need for the dollar to be the global reserve currency. And then what happens is that people outside of the U.S. who get those dollars because they export products to the U.S., the U.S. prints debt, and then it buys those products with the debt. Those dollars go to the foreign exporter. The exporter puts those dollars in its bank account, and then those dollars are used by investors in foreign countries to invest in U.S. assets. They buy U.S. stocks. They buy U.S. bonds, treasury securities. They buy U.S. real estate, and that causes the capital account to go into surplus. So there's all of this foreign finance capital that's constantly flowing into the United States, which is the inverse of its current account deficit. They're directly related. If you want to end the current account deficit, you also have to end the capital account surplus and vice versa. But Donald Trump doesn't understand any of this, which is why his policy makes no sense. Trump says he wants to reduce the U.S. current account deficit to zero, but then other countries won't have the dollars they need to keep using the dollar in international trade. But Trump says if they stop using the dollar in international trade, he's going to put tariffs on them. But then Trump also says if the other countries don't reduce their trade surplus with the U.S. to zero, he's also going to put tariffs on them. So what does he want? It makes no sense. The real way to reduce the U.S. trade deficit is to end the dollar system, is to move to a different kind of system like was originally proposed by John Maynard Keynes in the Bretton Woods Conference in 1944, his system of a bond corps, which would be an international unit of account, and then its value would be based on a basket of different commodities or maybe different currencies. That would be an actual solution. But instead of that, Trump is threatening any country that de-dollarizes. He's threatening BRICS. His strategy makes no sense. It's totally contradictory. And back in January, when Trump first announced 25% tariffs on the two largest trading partners of the U.S., Mexico and Canada, the Wall Street Journal editorial board referred to this as, quote, the dumbest trade war in history, end quote. And this latest escalation of the U.S. trade war on the entire planet is even dumber. It makes no sense and is going to cause significant damage to the U.S. economy. And Trump and his supporters claim, well, the reason that they're doing this is because they want to reindustrialize the U.S. Now, I am on record for years now saying that the U.S. does need to reindustrialize, that deindustrialization has been a big problem in the U.S. But just imposing tariffs on the rest of the world is not going to magically reindustrialize the economy. Later, I'll talk more in detail about that, but this strategy is simply not going to work. Every single advanced economy that has industrialized in history has done so through a state-led developmental campaign using government investment in infrastructure, in education, in key manufacturing sectors developing the human capital needed, investing in the actual capital equipment needed. And Trump is not doing any of that. He's imposing austerity and Reaganomics at the same time while he's putting on these tariffs and expecting that magically the free market will reindustrialize the US after it was exactly this kind of free market neoliberal economics that led the US economy to be deindustrialized in the first place. It's because the financial sector was deregulated under Ronald Reagan in the 1980s and then also Bill Clinton in the 1990s. This was bipartisan in the neoliberal era, and it was much more profitable for capitalists in the US to invest in the financial sector, not in manufacturing. Instead, they sent their factories abroad where they could exploit low-paid labor. They also wanted to break the back of unions in the US. And what happened? Instead of investing in manufacturing and in production, US corporations, they stopped investing and they spent much of their net income to buy back their own stock and to pay out dividends to push up their share prices, because in the same time, thanks to the Jack Welch model of CEOs and restructuring of corporations, we saw that the incentives of all of these corporate executives was to boost the price of their stocks. And still today, CEOs are paid huge bonuses if they increase the price of their stocks. So their incentive is not to actually increase production and to invest. And this is why in 2014, Bloomberg reported that 95% of the earnings of the top 500 publicly traded companies in the US in the S&P 500 stock market index, 95% of their earnings went to buying back their own shares and to paying out dividends to shareholders. This is why companies don't invest in actual production. It's not nearly as profitable. So until the US government fundamentally changes its policies toward the financial sector, it's not going to be profitable for companies to invest in manufacturing and local production. They're going to continue to invest in the most speculative areas of the economy, which are the financial sector, real estate. Private equity is a good example of this. The reason that private equity exists as an industry is precisely because companies don't want to create a new company. They don't want to create new factories. They want to buy up existing companies and then sell those companies for parts, asset strip them. That's the entire business model of private equity. In fact, instead of trying to solve those problems by massively taxing the rich, by taxing capital gains, instead of that, what is the Trump administration doing? The exact opposite. The Trump administration is cutting taxes on the rich. It's cutting taxes on corporations, and it's implementing austerity and slashing government spending on education and infrastructure and all of the other elements of an actual industrial policy that would be needed to reindustrialize the US. So this policy makes no sense.